Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those big corporate filings. Maybe we will uncover a hidden gem, or perhaps a hidden danger from these dry documents. Today we are diving into some juicy news from Columbus Circle Capital Corp, also known as CCCM. This report is all about significant changes happening behind the scenes with their business combination. The earliest event we are looking at here happened on the 3rd of December 2025. This is a Form 8K, which essentially means something important, and newsworthy has occurred that the company needs to tell the public about right away. Now, before we get into the weeds, there is a little checkbox here that suggests they might be using this report to communicate things beyond just the normal 8K requirements, which is always a sign that there is more to the story. Let's look at what the company is dealing with. They have units each made up of one Class A ordinary share and half a redeemable warrant. They also have Class A ordinary shares and redeemable warrants separately. These are traded on the Nasdaq Stock Market LLC. It means they are a publicly traded entity, and these different types of securities are part of their capital structure. And here is another key piece of information: they are identifying as an emerging growth company. This means they are relatively new and may have less strict reporting requirements for a certain period. This is common for companies that are going through significant growth phases or major business changes. The main event here is a big business combination. Basically, Columbus Circle Capital Corp, also known as CCCM, is merging with other companies including ProCap Financial Inc. and a few subsidiaries to become a publicly traded company under a new entity called Pubco. Think of it as a reverse merger where CCCM is essentially being acquired by a structure that will allow ProCap to become public. This whole process is called the business combination, and it is expected to be a game changer. Now let's get to the meat of this report, the agreements that are shaping the future of this merger. First up is the sponsor earnout agreement. This deal between Pubco and Columbus Circle, sponsor Corp LLC, which is the sponsor of CCCM, has some interesting conditions. The sponsors' shares that they get in exchange for their initial investment are locked up. These shares will only become fully theirs if certain price targets are met within 2 years after the merger closes. This is a common practice to align the incentives of the sponsors with the long-term success of the company. So for the sponsors to get all their shares, they need the Pubco stock to hit at least $10.21 for 20 days within a 30-day trading period. This is a solid target designed to ensure that the company's stock performs well after the merger before the sponsors fully benefit. But here's where it gets really interesting. There is another condition tied to the price of Bitcoin. If the volume-weighted average price of Bitcoin, also known as BTC VWAP, hits $140,000 over any 5-day period during this earnout timeframe, the sponsors' shares will also vest. This tells us a lot about the company's strategy and its connection to the cryptocurrency market. They are clearly betting on Bitcoin's success. And if neither of those conditions is met within 2 years after the merger closes, all of the sponsors' shares will vest anyway. This provides a safety net for the sponsors. Now let's look at another important agreement, the seller earnout agreement. This one is between Pubco and the seller, which is ProCap Financial Inc. In this deal, the seller also has a significant chunk of Pubco's common stock locked up in what they call earnout seller shares. Similar to the sponsor agreement, these shares vest based on price targets. Just like the sponsor agreement, the seller will get all their shares if Pubco's stock price reaches $10.21 for the specified period. And again, there is the Bitcoin connection. If the BTC VWAP hits $140,000, then the seller also gets to keep all their shares. This dual trigger system with both stock price and Bitcoin price tied to vesting is a strong indicator of the company's business model, which likely involves Bitcoin in a major way, perhaps as a treasury asset or a core part of their services. And similar to the sponsor agreement, if neither of those triggers is hit within 2 years, the seller's shares will fully vest. This ensures that the deal progresses and everyone involved is eventually compensated. Moving on to some executive changes. Garrett Curran has resigned from the board of directors. He was on the audit committee and compensation committee. The report states his departure was not due to any disagreements, so it seems like a planned move possibly related to the upcoming business combination. On the 4th of December, the company and Pubco released a joint press release about these earnout agreements. This is a common way to signal to the market that significant agreements have been put in place. However, the filing also clarifies that this information is not considered filed for certain legal purposes, which is a standard disclaimer. The document also provides a lot of context about the ongoing business combination. It mentions a registration statement on Form S-4 that is already effective. This is a crucial document filed with the SEC that contains detailed information about the merger for investors. They are also referencing a definitive proxy statement for CCCM shareholders to vote on the business combination. It looks like the shareholders meeting happened on the 3rd of December, the same day as the earliest event reported. This means the shareholders likely voted on this very deal. They also emphasize that investors should read all these documents because they contain vital information. They even provide details on how to get copies of these filings, mentioning the SEC's website and direct contact information for the companies. This is a standard but very important disclaimer from the CC. It basically says the CC has not approved or disapproved of this business combination. They haven't judged if it is good or bad or fair. It is up to investors to do their own homework based on the disclosed information. This part tells us about some other securities like convertible notes and preferred units that are part of the deal. These haven't been registered under the Securities Act, which means they can only be sold if they meet certain legal exemptions. This is often done for private placements or to sophisticated investors. This section deals with who might be considered a participant in persuading CCCM shareholders to vote for the business combination. It lists management and key holders and directs readers to other filings for more details on their interests. This is another legal disclaimer stating that this report is for informational purposes only and is not an offer to sell or buy any securities. It is crucial for investors to consult with legal counsel to understand any exemptions that might apply. And finally, we have the forward-looking statements section. This is a standard part of SEC filings where companies disclose potential risks and uncertainties about their future plans. They mention a lot of things here ranging from the success of the business combination itself to risks associated with the volatile nature of Bitcoin prices, the ability to develop new financial products, and potential regulatory challenges. They are essentially warning investors that the future is uncertain and many factors could impact the company's performance. They also stress that they do not intend to update these statements unless new information becomes available. Looking at the exhibits confirms what we discussed. We have the sponsor earnout agreement as Exhibit 10.1. This is the deal that links the sponsor's compensation to stock and Bitcoin prices. Then we have Exhibit 10.2, the seller earnout agreement. This is the deal for ProCap's seller in exchange for their shares in the business combination, again tied to stock and Bitcoin performance. And Exhibit 99.1 is the press release that was issued on the 4th of December announcing these agreements. Now let's talk about what this all means. The most striking aspect is the dual trigger earnout tied to both Pubco's stock price and Bitcoin's price. This isn't just a minor mention of Bitcoin, it is baked into the core incentive structure for the sponsors and the seller. This signals a strong belief within CCM and ProCap that Bitcoin's price appreciation is a key driver of their future success, perhaps even more so than traditional metrics. The sponsor earnout agreement and seller earnout agreement both have these triggers. If Pubco stock hits $10.21 for a sustained period, a significant milestone for a company, likely starting from a SPAC structure, the sponsors and seller get their shares. But if Bitcoin's price reaches $140,000 during a 5-day period, that is also a green light. This $140,000 figure is extremely high given current Bitcoin prices from what we know today, which suggests either a very aggressive long-term outlook on Bitcoin or perhaps a mechanism designed to reward significant upside in Bitcoin. It is not $14,000, it is $140,000. This suggests the company is aiming for massive Bitcoin price increases. The fact that the company is an emerging growth company and is going through a business combination to go public tells us this is a pivotal moment. They are positioning themselves for growth and relying heavily on the cryptocurrency market. The resignation of a director is not overly concerning given the transitional phase of a merger, but it does indicate changes ahead. The biggest risk here is obvious Bitcoin volatility. If Bitcoin prices crash significantly, this could jeopardize the earnout targets and potentially impact the company's overall valuation and business plan, especially if they hold a substantial amount of Bitcoin or their revenue streams are directly linked to Bitcoin price movements. On the other hand, if Bitcoin continues its upward trajectory and reaches those astronomical levels, the rewards for the sponsors and seller would be immense. Overall, CCCM and ProCap are making a bold bet on Bitcoin's future. They are aligning their key stakeholders' compensation with exponential growth in both their own stock and the price of Bitcoin. As an emerging company, this strategy has high risk and high reward potential. Investors should be comfortable with significant Bitcoin exposure and volatility if they are considering getting involved with this combined entity. Alright, that is our breakdown of CCCM. Latest filing, what is your take on these numbers and what they signal for the company's future? Do you think Bitcoin will hit $140,000? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.